Hello and welcome to today's video. Are you planning to build or buy a shipping container home? This video brings to you 10 models of financing a shipping container home. Stay tuned to find out more. Good, welcome back. To get a construction loan or a mortgage for any home is not a walk in the park. With shipping container homes, project financing can even be more difficult since shipping container homes are considered non-traditional housing. Most lenders won't lend you for a property that isn't permanently fixed on site with utilities and plumbing connected. So, why are shipping container homes given an extra level of scrutiny when being reviewed for a mortgage or a construction loan financing? There are different reasons for this. One, shipping container homes are sometimes categorized as mobile or manufactured homes since they don't come with a permanent foundation. Secondly, it is unpredictable to market the home should the bank be forced into a foreclosure in case of non-payment. Thirdly, it can be difficult to value a shipping container home due to lack of comparable housing in the neighborhood. So with all these setbacks, what alternatives do you have available if you want to build a shipping container home? The following financing options can be used to finance a shipping container home. The first one is an unsecured personal loan. If you have a good credit score, an unsecured personal loan can be an attractive option since you do not need any collateral to secure the funding. If you have no collateral and have a poor credit score, you will be loaned at a very high interest rate. So if that is your case, then this will not be an attractive option for you. However, there are financing companies that specialize in matching alternative house shoppers with a lender based on their credit score, location, and amount you want to borrow. So find out if there is any such company in your location or in your country before engaging your local bank. The second option is self-funding. If you don't mind getting your hands dirty, then this is the best alternative for a thrifty DIYer. This is basically incremental housing based on the availability of time and resources. The most important thing is to first get the most critical building materials, that is, the containers, and place them on site. Secondly, make the structure watertight and then do the finishing at your own pace. This process is the slowest since you may only work on the project during your free time and when money is available. The biggest advantage with this method is that at the end of the building process, you will have no debt on the house and it will be completed on your own terms. Number 3, home equity loan. If you are building your container home as a second home, you can use the equity from your primary home to take out a home equity loan or a home equity line of credit. A home equity loan is a lump sum that's usually limited to approximately 2/3 of the equity of your current house, and the loan is paid off just like your construction mortgage in equal monthly payments over a set term with fixed interest rate. The interest rates are slightly higher than your traditional home mortgage. However, if you have a good credit score, your primary residence is a valuable first property to use as collateral. Using a home equity loan to make a purchase may be an easier, less expensive, and speedier process than opting for a traditional mortgage loan. If you are building it as your second home. Have it listed on Airbnb to earn some extra income to help you in the loan repayment. Number 4, manufacturer financing. If you are purchasing a pre-made home rather than building it yourself, some modular home companies offer their own financing. Do your background check to ensure you understand the available financing options before you commit. Majority of home manufacturers do not offer financing but act as a go-between to connect the home buyer with a pre-qualified list of lenders they have worked with in the past. For example, a Canadian-based modular home company, Honomobile, is helping the home buyers obtain financing for their new homes. Some of the financing options available when you buy a Honomobile include home equity line of credit, construction mortgage, and home refinance. Number 5, buy instead of building. Why? Buying a ready-made factory-built container home is the easiest way to get a conventional method of home financing. Factory-built homes are classified as certified factor-built modular homes to make it easier to obtain bank financing and building permits. The advantage of buying a factory-built home is that they are designed in compliance with the local building codes and with the final address in mind. The building process of a factory-built home employs the use of certified professionals and engineers, which make the certification process easier. Most of the building materials used in these homes are similar to what you would find in a traditional commercial or residential construction. Electrical and plumbing fixtures used are all code compliant to make approval process much simpler. All the interior finishes and fittings comply with those used in conventional construction, making the compliance process smooth. The homes are designed to be permanently fixed to a permanent foundation, since the permanence of the home is an important factor for both the permit approval process and the financing of the home. So, if you are planning to go through the traditional method of obtaining home financing, then this is a method I would highly recommend you give it some thought. Number 6, microfinance. This option works best in an environment where getting traditional bank financing is not possible. If you are planning to build a shipping container home as a low-cost shelter and you have a poor credit rating, then consider microfinancing if it exists in your country. Microfinance initially was limited to provision of microloans to entrepreneurs and small businesses that lacked access to traditional banking and related services. Over time, microfinance has emerged as a larger movement whose object is a world in which everyone, especially the socially marginalized people and households, have access to a wide range of affordable, high-quality financial products and services, including not just credit, but also savings, insurance, payment services, and fund transfers. If you have a microfinancing institution in your country, consider giving them a visit to find out if you can get a financing of your dream container home. Number 7, sponsorship. This is another alternative for a thrifty DIYer. Why? With a bigger audience on social media platform, DIYers can earn sponsorships from companies offering to trade their services or blog their products they are using in exchange for free discounted items used to build their dream homes. YouTube is also a good source of how to do videos that not only enable many DIYers to learn how to go about their self-built projects, but also earn some commission by promoting items used to build their homes. Number 8, borrow from friends and family. This method of financing has been with us ever since. However, try make the process formal and have a lawyer prepare a formal loan agreement stipulating clearly the terms of the loan, repayment period, and interest rates payable, if any. This is just a safeguard measure to cover yourself in case of a default. Number 9, government grants. This method works where a government subsidizes the homeowners by granting them incentives to build their own homes. The process and the procedures for acquiring one varies from country to country. However, it is important to note that there is a set of criteria to meet before you are absorbed into the program. It is advisable to check through the criteria before submitting your application. Lastly, at number 10 is credit card debt. This is the easiest way to get credit. However, it is the least recommended way to finance anything. So financing your dream home using credit card debt is out of the question. If you are able to pay off the debt almost immediately, it is acceptable. But if the balance carries over from month to month, the debt can be crippling. It is advisable not to try to finance your shipping container home on credit card debt. Depending on your financial abilities, feel free to find out the financing model that is appropriate for you. If you feel we have left out anything, feel free to add by posting in the comments below. If you like the video, give it a thumbs up and feel free to share it. Remember to subscribe to our YouTube channel for our weekly videos on amazing design ideas from shipping containers. Bye for now and see you in the next video.